I'm Jason Cisney of the Legislative Analyst Office, and I manage our section here at the LAO that conducts our budget forecast, including our revenue and economic forecast. We forecast that California's 2011-12 general fund revenues will be $3.7 billion below the level assumed in the Budget Act passed last June. This means that all of the Tier 1 triggers and 3/4 of the Tier 2 triggers to schools in the state may be able to be executed if the Department of Finance has a revenue forecast similar to ours a month from now. Our 2012-13 revenue forecast shows very little net growth in revenues and transfers for the state's general fund in 2012-13, and that's a major contributor to the $13 billion budget problem that we project the legislature and the governor will have to address prior to passing the 2012-13 budget next year. California continues a slow, arduous recovery from the recession of 2007 to 2009. Unemployment in California has been over 11% for over 2 years now, and over 1 million jobs have disappeared in the last few years. Now, this is an important factor in our revenue forecast, and one of the reasons that revenues in 2011-12 are forecast to be lower than assumed in the Budget Act passed last June. While there are many challenges in the economy, including the weak job growth in California and the nation, there are some bright spots as well. For instance, personal income has held up reasonably strong despite the challenges in the economy. And in fact, we have increased some of our estimates for wages and salaries and the personal income tax in this forecast. Of course, those are offset by some other weaknesses. Another issue in this forecast that we discuss in the report is that there's a lot of uncertainty about federal policy over the next few months and years. This is principally related to the ongoing work of the super committee that is charged with coming up with a deficit reduction package. But also there are a number of important tax provisions. The 2011 payroll tax holiday, for instance, that's set to expire, as well as the tax cuts that were originally implemented under the prior federal administration, scheduled to expire next year. We have to make assumptions about how the federal government will act with regard to those matters. And if the federal government does something different from our assumptions, then actual revenues can end up better or worse than we forecast. Over 90% of California's general fund revenues come from the so-called big three taxes: the personal income tax, the sales and use tax, and the corporation tax. And each has their own story in our forecast. The largest, the personal income tax, is driven by wages and salaries, and personal income taxes are withheld from individuals' paychecks, as well as capital gains that come from the sale of assets such as stocks and houses. Now, with regard to wages and salaries, those have actually held up reasonably well in our personal income tax withholding, given the negative economic news that we've been seeing. In fact, our estimates of wages and salaries for 2010 and forward are slightly higher in this forecast than they were in our last forecast in May. With regard to capital gains, a very volatile part of the state's revenue stream, there have been downward pressures on the revenue forecast since our last forecast in May. The stock market had a rough summer, and in addition, our forecast for California house prices is even weaker than it was in the spring. Despite that, capital gains in our forecast have actually held up pretty well. In particular, there is a lot of initial public offering activity in the technology sector. That probably provides a little bit of bump this year and next year in capital gains. And for that reason, we forecast the personal income taxes will grow at a fairly healthy clip during the forecast period. Sales taxes, too, are forecast to grow fairly well during the forecast period. Consumption, retail sales, these dipped substantially during the recession. And one of the things that we're seeing now, and we expect to continue for the next several years, is that consumers will be playing a little bit of catch-up, basically buying things that they may have delayed purchasing when times were toughest, when credit was particularly constrained. We don't expect that consumption will return to its previous levels for quite some time, but we do expect some fairly significant growth during the next few years. Corporation taxes are the third largest revenue source for the general fund, and we forecast them to be flat over the next year before beginning to grow again later in the forecast period. Corporation taxes right now, their growth is being constrained because of the effects of recent decisions made by the state that effectively accelerated the receipts of some of those taxes to the last few years, but mean that the state get a little bit less right now and over the short term. And the relatively flat level of corporate tax growth is one of the key reasons why in 12-13 we forecast very little growth in general fund revenues. In addition, in 12-13 we forecast that the general fund will have to pay back over $1 billion of loans to special funds of the state, and that effectively means less revenues than the state otherwise would get in 2012-13. Like other state revenue forecasters, we put a lot of effort into these forecasts. But one thing that we can tell you for sure is that our revenue forecasts will be wrong. It will either be too low or too high for 2011-12 and for future years. And for the current year, we won't know for sure what the revenues of the state were until about a year from now. It's very hard to get data on the state's vast tax base. Data is often lagged. And so even right now, we're still estimating tax data with regard to prior years. We have to make informed judgments. Now, even between now and the time that the administration releases its forecast in December, there will be more data that they have to review to perhaps make a little bit better of an estimate, a more refined estimate of the state's revenues. There are a lot of uncertainties about the revenue picture. The standard uncertainties about the economy and capital gains, an unusual amount of uncertainty now about federal policy, which has a big effect on the economy. There are concerns about Europe and how its woes will affect the economy there and around the world. In addition, as we note in our forecast document, we don't know for sure yet whether the state will receive estate tax revenues again beginning in 2012-13. That's something that Congress really has control over. We assume that the state will not receive such revenues, but if it does, 2012-13 revenues would be higher than we forecast. So the revenue picture and the economic picture is a very complex one for California. And as the state's lawmakers and the governor look to balance the 2012-13 budget, they're going to have to be following a variety of economic and revenue developments which will be changing over the next few months.